Good morning, dear students. Hope you all are studying hard at home and enjoying the e-learning initiative of Cambridge International School, Dasuya. I'm your accountancy teacher, Mr. Sunil Kumar. Today, we will learn one more topic of the chapter. But before begin with the topic, let's recapitulate what we have done in our previous lesson. Let's revise the rules of debit and credit by traditional approach and the modern approach. According to the traditional approach, there are three accounts, that is personal account, real account and nominal account. Number one, the personal account covers all types of persons like natural persons, artificial person and representative person. The rules for the personal account is debit the receiver, credit the giver. Number two, real account. Real account covers all the assets of the firm, whether it is a tangible assets, intangible assets, current assets, fixed assets. The rule for the real account is debit what comes in, credit what goes out. And the third one is nominal account. It covers all the expenses, losses, incomes and gains. The rule for the nominal account is debit all expenses and losses, credit all incomes and gains. This is our traditional approach. Here are the rules of debit and credit by modern approach. It covers 5 accounts: assets account, liabilities account, capital account, revenue account, and expenses account. Rules. First rule is for assets account. When assets increases, it is debited. When decreases, credited. Liabilities. When the amount of liabilities increases, it will be credited, and when the amount of liabilities decreases, it will be debited. In the same manner, capital account. When capital increases, it is credited, and decreases, it is debited. Revenue, which is our income. When increase in revenue, it is credited, and decrease in revenue is debited. Expenses. When there is increase in expense, it is debited, and when there is a decrease in expenses, it is credited. So in this way, modern approach applies for debit and credit. Today, we will learn about goods, how we will treat goods in journal entries. Now, what is the meaning of goods? Goods are purchased for resales. It means whenever we buy anything for resale, it is called goods. It means when a shopkeeper buys some quantity of goods or anything for resale, that is known as goods. Goods are not taken to keep with the business or not uh, retained in the business for a longer period of time. So it is when it is purchased with the intention of selling, resale of it. In journal entries, we write goods in two ways. First, purchases. When we purchase goods, we write purchases account. Purchases is an expense, so it is always debited. In the journal entry, purchases are always debited. And in the same way, when we sell goods, it is always credited because sales creates revenue. Revenue is our income. Incomes are always credited. So in the journal entries, we write goods either purchases or sales. When we purchase goods, it is treated as an expense and it is always debited in the journal entry. When it is when there is a sale, when we sell goods in the market, it generates revenue, that is income for the company, for the business. So it is always debited. Here the nominal account rule is applicable, that is all incomes and gains credit, all expenses and losses debit. So hope you all understand the concept of goods. Goods is bought for resale. In the previous class, that is yesterday's class, we have done some cases of goods in which goods, that is purchases, is credited. In the previous slide, I had said that goods or purchases are always debited, but these are the special cases when purchases are credited because these goods do not generate anything for the firm. It is given away as charity. It is given away as a free sample or an as an advertisement, or it is taken away by the owner of the business for his personal use. In these cases, goods or the purchases are always credited. Now, there are three cases we had done in the last class. So, number one is goods taken for personal use. Personal use means it is also called drawings. Whenever the goods are taken by the owner of the business for his personal use, it is called drawings. So the journal entry is drawings account debit to purchases account, being goods taken for personal use. Now drawings. Here the drawings is treated as capital. If we take the rule, if we apply the modern approach, according to the modern approach, drawings are capital. Now, the rule which is applied here is decrease in the amount of capital is debited. So, whenever the capital is decreased, it is written as drawings. It means owner has taken money or any goods for his personal use. Drawings account debit to purchases. Now purchases mean goods. Goods, here the goods are taken for the personal use. Now the goods is not going to generate anything for the firm. So whenever it is taken for the personal use, whenever it is treated as a drawings, goods or the purchases are always credited. So being goods taken for personal use. Number two, goods given as charity. Again in charity, charity is a loss for the business. Now, whenever business gives goods as a charity to any organization, orphanage, old age home, etc., it is a loss for the business. So, here expenses account or losses account, increase in losses debit, that is charity account debit to purchases. Purchases mean goods is given away as charity. Here the goods are not generating any revenue for the firm. That is why, and it is whenever it is given, it is treated on the cost value. So here to purchases account, that is the rule is decrease in expenses to purchases. Now, third one is distribution of goods as free samples. Free sample means you are doing advertisement for the business and getting it will benefit you in the future. Advertisement is or free sample. We can write advertisement account or free sample account debit. It is expenses for the firm, so increase in expenses debit. Two purchases. Purchases are given away as free samples, so goods are given away as free samples, so we have written here purchases account. Hope the entire 3 points you understood how we have treated goods or the purchases in credit. So these are the three cases when purchases are credited in journal entries. Our today's topic is discount. What is discount? Discount is a reduction in the amount either to encourage more purchases. Here, whenever the seller wants to encourage or wants more sell sales uh, in the market, so he allows discount. And when there is a discount, customer wants to buy more. So discount is beneficially for both. It reduces the stock of the seller and it increases the stock of the purchaser. There is one more reason why the discount is allowed. It is allowed for the swift payment. Why it is allowed? Like sometimes when the seller wants payment at the time of sales, then also he allows discount. And if you want if he wants to get his debt before time, then also he allows discount. So discount plays as a enticement to the uh, person who is going to pay the amount to the seller. There are two types of discount: cash discount and trade discount. We will study both the discount in detail one by one. First one is trade discount. A trade discount is allowed when goods are sold to the purchaser for resale. It is always allowed by the seller to the purchaser when he buys goods for resale. It means wholesaler provides discount to the retailer so that uh, ultimate consumers it can be sold to the ultimate consumer. Or when goods are purchased in bulk quantity, whenever there are a person who goes to the market and buys goods in bulk quantity, he also enjoys trade discount. He also gets trade discount. The uniqueness of the trade discount is that it is never shown in the journal entries. Whenever journal entries are passed, trade discount is not shown. It is always deducted from the amount of the purchases and then shown in the journal entry. But trade discount is never shown in the journal entry. This is very, very important point. Whenever there is a trade discount, let's take an example to understand trade discount. If A goes to the market and buys goods of rupees 10,000 and he gets the trade discount of 10%, which is 1,000, and 1,000 is 10% of 10,000. Now, whenever there is a journal entry passed, it will be passed like this: purchases account debit to cash account. Amount is 9,000, 9,000. 1,000 trade discount will not shown in the journal entry. Hope this is clear by the example. Another discount is cash discount. A cash discount is allowed when amount is received promptly or before its due date. Now, it is very, very important that cash discount, why the cash discount is given. It is given for the prompt payment or the swift payment. Whenever you want the payment of the product uh, on the spot or as early as possible, you give cash discount. Or before its due date. There are bills of exchange, another topic. We will discuss that topic in a detail, but I'll take one example of bills of exchange. When we sell goods to the purchaser, to the buyer, and buyer does not pay amount on the same date, and he asks you for a bill, and on the bill, if you give payment date after 2 months, 3 months, whatever the months you have given, let's take 2 months. After 2 months, buyer is going to pay you the amount. It is written on the bill. But if you want that payment before time, cash discount. If you allow cash discount, the payment will be received before due date. So cash discount is type of an enticement which is given to the given by the seller to the buyer, so that the payment is received before time or on time. Cash discount when received or allowed. Cash discount is received or allowed. It is both type. You can receive cash discount, you can allow cash discount. And it is always recorded in the books of accounts. It means there are a journal entry for cash discount. Like trade discount, there is no journal entry for trade discount, but there is a journal entry for cash discount. Cash discount is allowed. It is allowed when payment is received. Whenever we receive payment, we allow cash discount. And cash discount is received when payment is made. Whenever we get cash discount, it means we have made payment to the seller. Here, one point is very important to note down, that is, if both discount, that is cash discount and trade discount, are allowed. If in the question both the discounts are given, trade discount is allowed first and thereafter cash discount allowed. It means first person has to deduct trade discount from the value of the product, and after deducting trade discount, whatever amount is remain, uh, cash discount is applied on the remained amount. So first trade discount is deducted, then cash discount is deducted. In this way, we treat cash discount. Let's understand trade discount and cash discount with the help of a question. Here is a question where we need to pass journal entries. Example is pass journal entries for the following transactions. Number 1. Purchase goods from Simranjeet of rupees 40,000 at 10% trade discount and 5% cash discount. Paid amount at the time of purchases itself. It means Simranjeet has bought the goods of rupees 40,000. When he bought goods of 40,000, he got 10% trade discount, and 10% of 40,000 is 4,000. Trade discount will be deducted from the purchase value, that is 40,000 minus 4,000, you are left with 36,000. Now, cash discount is given on the cash payment, that is whole amount is paid itself on the same day. So 36,000, 5% of cash discount will be charged on 36,000, which is we will see in the solution. The second point is purchase goods from Vikramjeet for rupees 40,000 on 10% trade discount and 5% cash discount. Half of the amount was paid at the time of purchases. Here, half amount is paid, half amount is left. The paid amount cash discount is given. Number 3, sold goods to Amarjeet for rupees 20,000, allowed him 10% trade discount and 10% cash discount. Received half of the amount by cash and balance half by check within specified time. Last one is sold goods to Amar for rupees 50,000, allowed him 5% cash discount and 10% trade discount. Half of the amount was received by check within specified time. Let's see the solution of all the 4 points. The first one is here. Here is the solution for the first point. Journal entries. We will draw 5 columns. We will draw the format of the journal. It consists of 5 columns: date, particular, ledger folio, debit and credit. Before passing the journal entry, we have to make a working note. Working note is called rough work, but in accounts, rough work should be in a presentable manner. It is called working note. and it carries some marks. So let's calculate the trade discount and cash discount. First, invoice price of the goods. Invoice price means the amount of the goods at which we bought the goods, that is 40,000 according to the question. And there is a 10% trade discount given on the invoice price. Less 10% trade discount, that is 40,000 into 10 upon 100, that is 4,000. 40,000 minus 4,000, we are left with 36,000. Now trade discount is deducted from the invoice price. Now it is the purchased value of the goods which is written in front of the purchases. Now if we see the journal entry purchases account debit, it will be debited with 36,000. We do not require we do not uh, record trade discount in journal entries. So purchases is the amount which is left after deducting trade discount from invoice prices. So purchases account debit with 36,000. Then cash discount is at the rate of 5% on the leftover amount, that is 36,000, less cash discount at the rate of 5%. 36,000 into 5 upon 100 is 1800. 36,000 minus 1800, we are left with 34,200. This is the cash payment which we made after getting cash discount. So the journal entry is purchases account debit with 36,000 to cash account. Cash account, this is the amount paid, that is 34,200. Now see on the credit side we have written 34,200, and this amount we will get from working note. To discount received, here the discount received is our income, all incomes and gains credit. So whenever we are paying amount to the seller and seller is giving us the discount, that discount is our income. So all incomes and gains credit, and this income is 1800 which we have calculated in the working note. So hope it is clear to everyone how to calculate the amount of trade discount and cash discount. As per the rules, trade discount is not shown in the journal entry. So if we see that journal entry, there is no amount of 4,000. It means trade discount is never recorded in journal entry. Later on, cash discount is shown in journal entry. So 1800 is shown in the journal entries. So in this way, how we will calculate trade discount and cash discount, after calculating it, how we make journal entry. Here is the solution of second transaction. Let's see what is written in the second transaction. Purchase goods from Vikramjit of rupees 40,000 on 10% trade discount and 5% cash discount. Half of the amount was paid at the time of purchases. This is the transaction. Now, how we solve it? Here is the solution. First, we will solve. We will make working note, which is always make after journal entries. Working entry, working note, we have to calculate the amount of trade discount and cash discount. First point is invoice price of the goods, that is 40,000, less trade discount at the rate of 10%. 40,000's 10% is 4,000. So 40,000 minus 4,000 is 36,000. We have 36,000 after trade discount. In this question, there is a change. It is changed from the first one. How it is? There is a difference. Like 36,000, half of the amount is paid at the time of purchases. Now 36,000 is divided into two parts. That is half of the amount which is paid at the time of purchases. It is called cash transaction, and the remaining half is a credit transaction. So it is explained here in the working note. A point, cash transaction, 36,000, that is the amount left after trade discount. 36,000's half is 18,000. it is cash transaction, amount immediately paid, and B, that is credit transaction, it is not paid. 36,000 half is 18,000, it is not paid at that time. So cash discount is always given on cash amount. So cash transaction, we will write 18,000, that is cash amount, less 5% cash discount. 5% of 18,000 is 900. After deducting 900 from 18,000, we are left with 17,100. So in this journal entry, one more amount we will write. Now see the journal entry, purchases account debit with 36,000. It is the amount after deducting trade discount. Now to Vikramjeet's account. Now Vikramjeet is a person from whom we have bought goods. So he is a creditor to whom we have to pay in future. So increase in liability. It's a liability which we are going to pay in future. Vikramjeet's account debit with 18,000. It is the credit transactions amount. And to cash account. Cash account means the amount remained after cash discount. Now this is 17,100 which we have calculated at the end. To cash discount received, to discount received is 900. So in this way we will pass this journal entry. Purchases account debit with 36,000, to Vikramjeet's account 18,000 which is a liability, so increase in liability is credit, it is 18,000. To cash account 17,100 which is calculated here below, and to discount received 900, it is again calculated here below. So in this way we pass journal entry. The narration of the journal entry is being goods purchased from Vikramjeet at 10% trade discount and 5% cash discount. Half of the amount paid in cash. Here is the solution for third transaction. Third transaction is sold goods to Amarjeet for rupees 20,000, allowed him 10% trade discount and 10% cash discount. Received half of the amount by cash and balance half by check within the specified time. So again, first we do working note solution here. Calculation of trade discount and cash discount. Number one is gross value of goods, that is 20,000. We have sold goods for 20,000. Less trade discount, 10% of 20,000 is 2,000. 20,000 minus 2,000 is 18,000. This is the sale value. If you see to sale on the credit side, there is 18,000. Now earlier we were doing two examples of purchases. Now this is the example of sales. Sales is always credited, so sales account credit with 18,000. This is the amount which is left after deducting trade discount. Now less cash discount, 10% of 18,000 is 1800. 18,000 minus 10,000 is 1800. 18,000 minus 1,800 is 16,200. Now here half of the amount is paid in cash and half by check. Check means bank. Whenever there is a check written in the question, it is treated as bank. So check and bank mean the whole discount will be given on the 10% discount will be given on the whole amount, that is 18,000. So the journal entry is cash account debit 8,100, bank account debit 8,100, discount allowed account debit with 1,800, to sales account 18,000. Now 8,100 is we have left with, after deducting cash discount from 18,000, we are left with 16,200, and half of 16,200 is 8,100, that is paid by check, and half is paid by cash. So cash amount is 8,100, bank's amount is 8,100, discount allowed is 1,800, sales is 18,000. So in this way this transaction is completed. So here the solution for the fourth transaction. Now fourth transaction says goods sold to Amar for rupees 50,000, allowing 5% cash discount and 10% trade discount. Half of the amount was received by check within specified time. Now half of the amount is received, half of the amount is not received. So the amount which is not received is our asset. So let's see how we will tackle with this question. First, we will see the working note, calculation of trade discount and cash discount. First, gross value of the goods, that is 50,000 less 10% trade discount. 50,000 10% trade discount is 5,000. 50,000 minus 5,000, we are left with 45,000. So this is the value of sale. So if we see in journal entry, credit side to sales, 45,000 is credited. Now, cash transaction, half of the amount is paid in received in cash. The cash transaction of 45,000 is half amount, that is 22,500. Cash discount is always received or given on cash payment or cash receipt. So here the cash receipt is 22,500. So the cash discount will be given on 22,500 less cash discount at the rate of 5% on 22,500, that is 5% is 1125 1125. After deducting 1125 from 22,500, we are left with 21,375. This is the amount received, cash received. Okay. Now, in this question, they have question is saying that amount is received by check, so it is written in front of bank. Half of the amount, that is 45,000 into half, 1 upon 2, 22,500 is not received, so it's a credit transaction. So debtors are created. Here, Amar is a person who will pay us in future, so he is an asset for the business, and if there is a person who is going to pay in future, he is called debtor. Debtor is an asset for the organization. So the journal entry will be increase in debtors, that is increase in assets, debit. Amar's account, debit, with 22,500 he is going to pay in future. Bank account, debit, bank, which we have seen that 21,375 after deducting cash discount, and discount allowed is 1125. So discount allowed is a loss for the business, so it is debited. So Amar's account debit, bank account debit, discount allowed account debit to sales account is a journal entry. Amar's account debit with 22,500, bank account debit with 21,375, discount allowed is debited with 1,125 to sales account, that is 45,000. In this way, we have completed all the 4 transactions in today's work. So hope you all understood what we have done in this slides. We have done today 2 types of discount, cash discount and trade discount, and both the discounts are very important and crucial in journal entries. So practice hard to understand these 2 discounts. If you feel any problem in any question of cash discount and trade discount, please do let me know through the message, WhatsApp message, or you can make me call at any point of time in the day. So this is all for cash discount and trade discount. This is all for the day. Thank you for listening it very patiently. Till then, stay safe, stay healthy, and stay at home. Thank you.